Hello and welcome to Wealth Decoded, where we simplify money, investing, and wealth creation to achieve financial freedom. Today we are talking about a question many people ask: can saving alone make you wealthy? Let's start with saving. Saving is important because it helps protect your money. Many people keep their money in savings accounts or savings app. While these options are generally safe, their returns are usually quite low. For example, if you save 100,000 naira and earn 1% annual return, you will end the year with 101,000 naira. That's only a 1,000 naira increase after 12 months. What does this tell us? Savings protect your money, but they don't necessarily increase your growth. Now let's talk about investing. When you invest your money in legitimate businesses, assets, or investment platforms, your money has the potential to grow at a much higher rate, depending on the type of investment. You may earn returns of 10%, 15%, or even 20% annually. This is why investing is often considered one of the most effective ways to build wealth over time. However, there is a reason many people are afraid of investing. Unlike saving, investment comes with risks. If you invest without proper knowledge or risk management, you could lose part or even all of your money. That is why it's important to understand the stages of investing before you begin. Let's talk about the stages. Stage 1: build an emergency fund. Before investing, set aside money for emergencies. This fund is neither for spending nor is it for investing. It is reserved for unexpected situations such as medical expenses, car repairs, family emergencies, urgent bills. Having an emergency fund protects you from touching your investment or savings when life happens. The next stage: change your mindset. Don't see savings as the ultimate solution, and don't see investing as a get-rich-quick scheme. Successful investing requires patience, learning, and discipline. Take time to understand how investment work, learn about risks, and know when opportunity makes sense for you. The more knowledge you have, the better decisions you'll be able to make. Stage 3: start small. One of the biggest mistakes beginners make in investing is investing too much too soon. Start with an amount you are comfortable losing while you learn. Use small investment to understand how market works, how risks affect returns, and how to manage your emotion when price go up or down. Develop a habit of learning and staying informed. Stage 4: focus on simple investment. As a beginner, avoid complicated and highly risky investment. Instead, focus on simple and proven investment options. For example, index funds have been recommended by many successful investors because they offer diversification and are generally easier for beginners to understand. Remember, you don't need to chase every opportunity you see online. The last stage: stay consistent. Consistency is one of the most powerful tools in wealth building. You will definitely make mistakes. Every investor does. The key is to learn from those mistakes, adjust your strategy, and continue investing regularly. Building wealth isn't exciting every day, but over time, consistency produces results that most people never achieve. Think of it as this way: saving money is like storing seeds in a jar. The seeds are safe, but they don't grow. While investing is like planting those seeds in a fertile soil. At first, growth may seem slow, but with patience, care, and consistency, those seeds can grow into something much greater. If you found this video helpful, don't forget to like and subscribe and follow Wealth Decoded for more practical financial tips and wealth building strategies. See you in the next video.